Hey, this is Rob Swanson with the Real Estate Mogul Show. Let's get into it. What's up, everybody? Rob Swanson back here with another episode of the Real Estate Mogul Show. We've got a good one today as we are plowing towards the end of the year. The end of the year. We just had Thanksgiving. We're heading into Christmas, and everybody is saying, hey, this is my month to sit back, relax, chill out, and not do anything, right? Is that what everybody is saying? I doubt it. Most of us that are listening to this, you are probably a type A driven entrepreneur. You've got some goals. You want certain things out of your life, out of your financial life, and sitting back is probably not inside of your DNA. So we're going to talk about some strategies and things to think about as you plow into the end of the year, things you've got to do before the turn of that calendar date, December 31st to January 1st. But we're going to also talk about how do you frame and how do you get set up for the next year, and what does the next year mean and look like to you. So we're going to be diving into that. If you have enjoyed these shows and these episodes, what we'd like to invite you to do is give us a like, share this on your social media platforms, subscribe on your favorite podcast player, and then just let your friends and family know about this. If you've got a network of people that you think would get value out of the things that we talk about, it would do us a lot to rock the algorithms a little bit and get people listening to this show and knowing about it. So with that being said, let's jump into this, gentlemen. Let's I don't know, what are we going to talk about today?
First off, I want to talk about how good my turkey was for Thanksgiving. Did you see the picture I sent you?
No, I didn't.
I thought I sent it group chat to both you guys. Okay.
I definitely saw it, but I didn't see who the
You're
message
going to do a
went to.
turkey this week, so let me send you what I did in case you want to maybe kind of mimic it a little bit on your smoker. It was insane. My favorite part of Thanksgiving is the couple days after when you have a bunch of leftover turkeys, and it's like super nostalgic for me. You go and buy a bunch of deli rolls and you make some like cold turkey sandwiches in the morning. It's nice. Oh man, it's so good. But yeah, kind of I thought of this topic today, Rob. I wanted to talk about it because there may be other listeners out there, like you said, not the people that are going to take December off and get a little rest and relaxation. The other people that are taking December by the horns and want to roll into January with momentum, right?
Yeah, that's right.
Because, I had this thought that, I don't want to hop into January 1st and not have any deals in the pipeline and then not close a deal until February. And then I haven't made any income in the first month of January. And to make that happen, that means you got to be working in December.
That's right.
So I had this realization, kind of thinking about it in that light, specifically because this month of December is going to be super busy for me personally, because I'm having to set up a whole bunch of systems in preparation for tax season come April next year. And I think the topic that I thought about was, years before I started wholesaling, before I started working here at FreedomSoft, classic W-2. You do your maximum in your IRA or 401k, and your taxes get paid for you, and you just file, and it's easy peasy. And I think that's the seat that a lot of people sit in, and that's fine if that's what they want to do. But then you have, the entrepreneurs and the listeners of this podcast that are either into wholesaling or trying to get into wholesaling. And I think the one thing that I'm experiencing is that on the flip side, the W-2 401k, you save money and you keep it in a bank account, and it's your rainy day fund, or it's what you use to take vacations, and that's fine. And that's the mindset that people sit in. And then on the flip side, if you take that mindset into the wholesaling and the active earned income that's going to be coming in through wholesaling, rentals, blah, 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 that money is going to have to work for you somewhere, someplace. Because what I'm figuring out is, even though I thought I made it work for me this year, there's a lot that needs to be done leading up to April, so that I'm not cutting a fat check to Uncle Sam.
Well, there's a lot that needs to be done leading up to December 31st.
Yes, December
Because
31st.
By
yep,
April, it's way too
yeah.
late.
My actions need to be done in the next couple of weeks.
Yes, and what one of the things that I think that you will learn is the fact that you still have taxes in your brain tied to the month of April is an opportunity to learn the next level of when are taxes actually due.
Yeah.
and September, October is really so. What you're going to find is that there's two things that I think are interesting for us to talk about this in this show, in this episode, because it's conversations that we've been having around the office, right? So Henry, 2 years ago, you got into the business and you started wholesaling, and you made a little bit of money on top of the W-2 that you get from working here and serving our customers at FreedomSoft. And that little bit of income, offset offset a little bit against the money that you had paid in through the W-2. You didn't get a tax return, but you didn't owe a whole lot, but it got you in the game, right? And from that year to this last year, or to this year, was a massive jump in income.
Yeah, so that's what Mike and I were just talking about in his office. You start running numbers and looking at everything, income, expenses, kind of thing.
That's right.
And what I realized is that I more than doubled the amount of deals that I did in 2023, but I spent almost 50% less in expenses.
Right.
So
you spent half the money on the marketing, and you closed twice the number of deals.
Yeah, and just in general, there was a lot more moving parts in setup and getting used to things. So I was spending more money in the first year to figure everything out.
Yep.
And then this year kind of narrowed it down, and there wasn't a lot of moving parts on, like, I didn't need to start up things. I didn't need to go and purchase these softwares or do different things because I'd already had them. So just less expenses overall, but more deals done.
Right.
Boy,
So
doesn't that speak to the idea of your skill and knowledge increases, and the amount of work or the effectiveness of the work you're doing, it will massively increase.
Yeah, but then you jump into just something, a new thing that you have to master and get good at, which is the management of money, figuring out how to. Now I'm just getting into the idea. This could be a topic that we can eventually talk. We talk about managing the title company. We talk about managing the property manager. Now we need to talk about managing your accountant and figuring that side of things out, which is interesting. But yeah, I mean that's essentially what I'm hopping into in December.
So let's do this. Let's go back. Let's go back in time for a minute, because somebody is listening to this saying, what was the key thing? And somebody right now is like, yes, ask that question. What was the key thing that went from the year before to this year that allowed you to spend half the amount of money on marketing and double the income? And we don't have to get into personal numbers, but you did really well wholesaling this year, and you did well enough to acquire 3 rental properties from the income earned in wholesaling, and still have a nice chunk sitting in the bank account for other investments, just waiting for the right place. So somebody's asking, what was the key? What was the thing? Can you boil it down to a mindset, an action, a tool, a list, a marketing strategy, a technique, a skill, a thing? What was it that changed everything?
I'm glad you said mindset, because that was number one. Definitely a mindset thing, and it's definitely at first it was an effort thing, but then it flips into how we teach. The effort doesn't have to stay as grind. You don't have to grind as much because your skill surpasses that. So it doesn't feel as hard as work as it did in 2022. But so it's definitely a mindset thing, believing it works, seeing it works, and then just repeating the formula, basically. And for me specifically in my market, it was sticking into just one market, focusing on that one market. In 2022, I was still, do I want to be here? Do I want to be there? Do I want to be in this city? And I was kind of throwing out marketing a little bit everywhere. And I wasn't all over the place, but I wasn't able to hone in on one city and learn and meet people and build connections in one place at one time. So in 2023, I said one city, stayed in that city, And then I had also worked through all the bad neighborhoods, the bad lists in 2022, hence the high marketing costs. I was just shooting out marketing wherever I could, getting a lot of leads, but the deals were falling through because the margins and the numbers just weren't there. So I focused on better areas, better list in 2023. And since I had already learned that market, I was able to focus on the connections, meeting people, building relationships, and just finding those really good pocket buyers that I could keep coming back to.
Yeah. So I like it. So if I'm hearing you right, there was learning through the actions of that first year. There was refining where you were putting the effort. So you had kind of worked through what you call the bad lists, and I don't want to say that they're necessarily bad lists, but they were lists that produced smaller margin deals.
Yeah, don't
right?
get me wrong. I mean, I could go and build the same list, the same filters, right,
Yep.
in another neighborhood and get better results. So technically the list or the category of the list is not technically bad, like I said. It's really more learning about the neighborhoods and the areas and the types of houses
Yep.
and the margins that are in different blocks or different
Yep.
spots in a municipality.
Well, I think when we at Real Estate Mogul Live that we did here a month ago or so, one of the sessions we did was we kind of walked people through that case study of the evolution of some of your first deals to some of your more recent deals, and we showed people sort of the change in the type of property, the type of neighborhood, the type of opportunity that went from the beginning to where you are today. And there was not only a noticeable visual difference in the properties themselves, but there was a noticeable margin difference in the opportunity. So just putting your effort into a higher margin opportunity makes you more money with the exact same amount of work.
Yeah, I think the realization that people may have had there was first off, their mind may eventually say it's not about the area, it's just how much work it didn't need, a house didn't need. But that really, at least in my market, and I think in a lot of other markets, it's all about the area and where the buyers are. Yep. So you can have a house that needs absolutely nothing and is sparkly clean on the inside, and you could say and type up in your write-up that it's rent ready. But if there's no cash buyer there that's filling their portfolio up on that street, well, then you're going to have a hard time getting that margin that you thought that you were going to have.
Yep.
So I think that was the lesson learned, that even though you could run your numbers exactly correct, right? But what I tended to try to focus on in 2023 was getting out of those areas and really focusing on where I heard people talking about where they wanted to be.
Yep.
And then you get to go and play wholesaler, which is what we describe ourselves as. We're the deal finders. We go and find the good stuff for the cash investors that are buying for passive income or doing their BRRRR method or flips or whatever.
Yep, I like it.
Yeah.
I like it. So the shift was just understanding the market, taking a lot of the same actions that you took the first year in this year. But do you think your skill level increased? So you took the same type of actions, refined the geography a little bit, and then over time, did the skill, did the conversation improve? What your deal analysis? Where else should somebody be leaning in on the skill side?
Yeah, deal analysis for sure, but that comes fairly quick as long as you learn the math, and then it's just a repetitive process. You tend to learn, the more you learn about the market and the zip codes, you're like, okay, that house is that big. I know it probably rents for that, and I know currently right now in the market the way that it sits, ARV is X.
Yep.
My buyer's going to pay this, and I need to get it for that. And you may see that deal multiple times over through the year, and then same for any other zip code. So the deal analysis eventually gets to a level where it's just the same every time, right? Because you just run the math that we teach.
Yep.
Now on the offer side, the negotiation side, the sales tactics side, the psychology, that is where the skill needs to keep climbing and only get better and better.
Yep.
And I think that's the mindset thing, being able to be okay with failing and sucking at it for a little bit. And then, just feeling more and more comfortable on the phone, not feeling in a place of, uncomfortable, posture when you're talking to a seller, and being more in an upright, positive feeling position when you're trying to help out these sellers. So what I notice is that, I'm not nervous anymore on the phone. I don't stutter. I don't, grasp for what I need to say or rebut when a seller comes back with X, because like we teach in the one call close script, it may veer off to this branch or limb, but eventually you get it right back on track and you're shooting straight down to one destination.
Yeah.
Yeah.
Yeah, I like it. That's good. I think one of the other things, because you just said it, you said it gets to a point where it becomes repetitive, where you're seeing the same deal over and over and over again. And that's one of the core components or elements that we teach, right? And what I'm talking about here is the buy box. And we teach the concept of, even as a brand new investor, develop your buy box. Here's what I find. As somebody becomes more experienced, as their team grows, as their marketing widens out, as their business gets bigger, their buy box expands a little bit, because now you might have multiple different buy boxes for different types of strategies. But in the very beginning, depending on what your objectives and goals are, and most people that get into real estate investing have the same goal ultimately, and that is they ultimately want to create financial freedom through real estate investing. They want passive income to exceed their expenses. They want to be able to work when they want, hang out with whom they want, travel where they want, at any time they want, right? So that's the ultimate goal that most people have. And so what most people do then is they get in and they learn a skill. They learn a marketing technique, or they learn an exit strategy or a deal structure. They learn something, and they just go out and they try to do that deal. And they never really stop and think, is this deal leading me to the ultimate destination that I want? And so that's why we teach the buy box. And what we want people to do is identify what their target deal is. And you talked about, things start to look the same. You run the same math every time. The rents are about the same. The purchase price is about the same. The repair costs are about the same. The house is about the same. It's the same square footage.
You don't get numb to it. It just literally is. Once you figure out the market, all the houses are maybe different colors. The shutters are different, but the square footage is roughly around the same, 100 to 200 square feet. It's 2-bed. It's 3-bed. It's got a half bath in the basement. And you just know when something changes on that house, the buyer's number changes to X, right?
That's right.
And that number will change. It did this year because of the interest rates. You saw, what an investor was buying for $90K now only feels comfortable paying $60K for it or something like that, because of the drastic shift in the cost of what it was going to take for them to get their money.
Right.
So, but that's just stuff you learn, and you don't get really numb to it. It gets easier.
That's the point.
Easier,
the point of the buy box is that it becomes repetitively easy, right? And you can never get complacent, because if you get complacent, you're going to miss that important, meaningful thing that affects this deal or that deal, right? But the buy box creates focus. And the buy box expands, like I was talking about, as your business grows and your business expands. But what you'll also find is that some of the biggest investors, some of the most successful guys, they don't just chase every deal that comes through the door. If it doesn't fit their window, if it doesn't fit their box, they ignore it, because it's a waste of time to go and create something or try to extract something out of this oddball thing that doesn't meet the model, right?
Yeah, it's funny that you bring that up, because in the beginning, we teach offer on everything, right?
Yep.
But you offer the number that it has to be at, right? But I was doing that plus haggling to get to their price to make them feel comfortable and getting it under contract, because
Right.
that was the win for me.
Yeah.
Which is fine, because here's the thing: through 2022, I was doing that, failing forward, and that brings me into 2023. And it's funny that you bring up that mindset shift, Rob, is because in leading up to that, I saw investors treating my deals like that. They're like, "Oh, it just doesn't work. That's not what I buy," and they were on to the next one, right?
Yep.
No second thought whatsoever.
Right.
They purely looked at the deal,
No
with
emotion.
no emotion, just with a fine, magnifying glass. Doesn't work.
That's
I'm
right.
on to the next one. And I remember roughly another wholesaler that's pretty big in St. Louis. I was talking to him about a deal in 2022, and I'm glad you brought this up, because he was like, "Dude, it's just not going to work. The seller wants too much, and you're trying way too hard." And I was like, "What would you do?" And he was like, "Oh, I would have already talked to someone else. I would have already gone on to the next deal." And that was the exact same mindset that you were just saying. It's like, if it just doesn't make sense and the seller, wants too much, it's great that you put yourself into that situation, because it was a lesson learned and you got to have another conversation. But the mindset is there's another deal right around the corner,
Yep.
basically.
Mike, you got something?
Yeah,
to say?
we gotta spend another minute on this buy box idea. I've lost track of. So we've been working with investors for a long time, and we've been talking about a buy box for a long time. And for a long time, an email has come in or a conversation has come in that said, "Oh, hey, Mike, I just was presented this deal, and it's not even close to the buy box." But here's the danger in. So you need to know how to run the numbers quickly. That's the advantage. The danger in it is that something that's not in your buy box presents itself or finds its way into your life, and you very quickly run the math and you say, "Oh my gosh, this is not even close to a typical deal that I'm going after."
Yep.
But if this fell into place, and if this fell into place, and if this fell into place, this is a $150,000 payday.
Yeah.
And what happens is now you're off chasing something that you know very little about.
Yep.
You don't have a buyer's list for it. You don't understand the deal. I'll give you an example. A deal came. "Hey, Mike, I got presented with it." And here's what happens. Activity creates activity. So the more you start to go take action and move in the direction that you want to go, the more outside or external opportunities are going to find you. And they're dangerous, because you start to have some success and build some consistency in what you're doing inside the buy box. And as you do that, more and more opportunities come your way. And then you get approached with "Oh, this is a multi-use building, and it's commercial downstairs, and it's residential up top, and it's vacant, and you just need to do this to this is the deal that I got approached with." And my question back to our student was, "Is this inside your buy box, yes or no?" Like, time out. Pause the conversation. Do you know anything about the commercial rent rates in this block, in this area, in this zip code? And the answer was no, I don't. Okay, then the answer is next. But I'm telling you, we have to talk about this, because action creates action. And it's going to come in from external. And sometimes you send out marketing to a single family home, and the seller calls you back and says, "Hey, I don't have a single family home for sale, but I've got this commercial building down here." And they're going to approach you about it. And so one of your biggest challenges is going to be learning to say no,
Right.
and saying no quickly.
Right.
Instead of going, "Wait a minute, I know how to run the math. Oh my gosh, this is a $500,000 payday."
Yeah.
And
So
then
yeah.
you just real quick, you get pulled off on this crazy tangent trying to chase this one-off thing that's way outside your buy box. And the danger in that is 2 weeks later, 4 weeks later, 2 months later, you wake up and go, "Oh my gosh, what the heck did I do that for?"
Yeah. Well, it's opportunity cost, right? You think you have this big opportunity to chase this thing that you're not sure how it goes together. And I will say this: most people, if you ask them, "What's your worst day on that deal?" What if you buy that asset? What if you buy that property and something doesn't work, right? Construction cost increases by 50%, or interest rates go up by 3 points, or fill in the blank on what could go wrong. And if you ask, what's your worst day? Like, how do you get out of it? If you need to get out of it, most people can't tell you. So the worst day question will oftentimes keep you out of those deals if you get skilled enough to ask the worst day question, right? So I'm pretty sure, Mike, that same deal that you're talking about at the live event over lunch, I got talked to about that same deal, and it was
the typical, I didn't like the answer Mike gave me.
When I was
Yeah.
a police officer, we used to call that sergeant shopping.
yeah, exactly.
I want to do this training. Can I get the right sergeant to say yes?
So I gave the exact same answer as you, though. I don't know who got the question first, if it was me or you. So they either shopped the sergeant, you to me, or me to you. I'm not sure which order, but the deal. The person came up to me and said, hey, Rob, I've got this deal that I want to talk to you about. I think it's a really good deal, and starts going down this list of it's commercial here, and it's residential here, and it's this, and it's this, and it's this, and it's all this stuff. And by the time the conversation was 3 sentences in, my head was already thinking. So I just stopped the person. I said, hey, I'm going to just stop you right there. That is outside of my buy box. I said, it might be a good deal, but it's not a good deal for me. And I said, I'm not interested because it's outside of my buy box. It's not what I do. I know what I do. I'm going to stay focused on deploying capital for myself and my capital partners so that we can produce the types of returns that we want in an efficient managed manner. And I understand my exit strategy. And like, it just stopped right there. I just said, not my buy box.
That reminds me of the accidental hospital purchase.
Yeah.
Where you're like, if you
That's
had
right.
asked that question, what's my worst day? That was the first I had heard you talk about that. Like, ask that question.
And I did ask the question. The problem was I was too inexperienced when I did that deal to answer the question properly. So there's a component to that too, right? Sometimes because I was younger in the business, newer in the business, I was active, aggressive, and driving forward. I was making things happen. So that deal came along, and I'm like, I can do this deal. It was a freaking hospital with a long-term acute care center. What do I know about that? Nothing, right?
Right.
But it was, in my mind, I was like, yeah, I can lend on this deal. I can get involved in this deal. But I didn't understand how to answer the worst day question. What's my worst day? And I thought I did. I thought I understood my worst day. My worst day was wildly different. My worst day did not include multiple lawsuits, both directions, with the city, with the county, with the, like, it just didn't cross my mind because I was inexperienced. And my worst day didn't include the good old boy old money network of that little town in Texas against the outsider investor that now had to foreclose and owned this massive structure in the middle of town that was an eyesore and a pain in the butt, and they wanted something specific out of it that I was not a party to. Anyway, the worst day.
That, I mean, really, again, sort of just pushes my thought to proximity. If you're inexperienced, to talk to another investor who has more experience, then to help answer those questions, how powerful would that be, right?
Yeah. Yeah, and here's the thing. So connect those dots, right? So there's proximity, and there's the ability to ask another more experienced investor that question, the worst day question, and they might give you their evaluation of the worst day. The question that you're going to then have is, do you, number one, believe them? And do you, number two, think that if you don't do this deal, you've got another better or more aligned opportunity right on its heels? And that's where most people go wrong. They don't know where their next deal is coming from. They don't know how their next deal is going to show up. They don't know what shape, form, or size their next deal is going to be. And so when a deal in their mind, deal, and I put in air quotes, and I do this very loosely, use the word deal. When a deal shows up, they feel like they have to go all in and try to make that into something because they don't know what's next. And so, number one, you may not believe the more experienced investor because that investor is looking at it from the lens of worst day, but also, is it your buy box? Is it what you have the skill to do? Do you know anything about it? Like, there's a lot of considerations, and you may ignore or disregard that experienced investor's advice because of the fear of missing out.
Yeah, well, what you just said there, though, was like just someone's mind playing the scarcity mindset.
That's
basically.
right.
It's like, well, this is it. This is my deal that came across this year, and I don't know what's going to happen a month from now, so I need to make and take advantage of whatever just got thrown on my plate.
Yep.
But to rebut that with what Mike said, action gives more action and more opportunity, and I can speak from experience now, is because the more you embed yourself into that market. Now, granted, again, I've still never physically been to St. Louis, but I know a lot of people there now. I've built connections. I've built a phone book, basically, of people that I know, and that was just from having conversations and being there. And now I'm on people's buy list. I'm a buyer on their list. So the more you embed yourself, again, like I'm going to keep getting emails now from people, and who knows, next week, this week, I may get just a sweetheart of a deal that I can't pass up because I'm going to look at it with the lens.
Yep.
Does it meet my buy box? Yes. If no, on to the next.
Yeah.
It's just simple flow chart.
Exactly.
Yeah.
It gives you so much focus and clarity around what to go do and how to go do it that you get out of living in that scarcity area. And you know, if we bring this full circle to, you know, we started this by talking about the end of the year, like what do you have to do to the end of the year? What I would tell somebody is get clear on your buy box.
100%
Like,
yes.
Get clear on what defines a deal to you. Like a deal to you might be an A neighborhood, you know, $800,000 fix and flip. That might be what you're looking for. If that's what you're looking for, define that as your buy box. And when the 1,000 square foot rental deal comes along, that's not your buy. Ignore it, right? Or go over here and define your buy box as the 1,000 square foot, single story, 2 or 3 bed, cash flowing house, right?
It's not a one size fit all. Yeah.
Yes, it's not one size fits all. Understand what your objective is, right? If your objective is financial freedom, a neighborhood fix and flip is not going to get you there. And I can tell you that from 20-some years of experience. The guys that were fix and flippers 20 years ago are still stressed out, pulling their hair out, looking for their next deal, trying to fix and flip another deal today. And that doesn't mean that they don't make some money. They make money, but in 20-some years of in this business, if you're a fix and flipper, what have you ever done to create financial freedom? Ask yourself that. If you're a buy it, sell it investor, ask yourself, are you getting off the hamster wheel ever? So as we head to the end of the year and into next year, ask yourself, what is your buy box and how can you get focused? Only focus on those deals. Get really good at doing those deals. Whether that means you wholesale it, whether that means you close on it yourself, whether that means, you know, you figure out how to extract the revenue, the profits out of it. So that's what I want us to take out of this buy box. Focus into the next year, into the end of this year and into the next year will take you significantly farther than trying to create a deal out of every opportunity that presents itself. Get focused. Now I want to shift conversation here from, you know, what do you do? We're talking here about the make money side of the equation. Let's talk about the keep money side of the equation, because there's some fun in the keep money side of the equation. It's not all CPA math, right? And boring stuff. And so people have heard that, hey, I talked to my CPA. Like, usually you hear this in the entrepreneurial worlds, right? Or people see it on a Facebook group post, and they either live inside of the world, the bubble that understands what is being said, or they live outside of it, okay? And here's what I mean by this. The post is something like this: talk to my CPA, and he told me I need to go buy a new truck. If you live outside of that bubble, you have no comprehension as to why that was being stated. And what you believe and what you see is that somebody flaunting that they have enough money to go buy a new truck. 100% not what it is. It literally is. CPA said you can do one of two things. You can give the money to the government, or you can give the money to yourself. What do you choose? I would choose to give the money to me every single time. And you do that in the form of, in this example, you go buy a new truck. Why does that work? Because you go buy a new truck, and let's just say that you're going to buy a $100,000 truck. You're going to take accelerated depreciation against that truck, and you're going to write off. A couple years ago, we got to write off 100% accelerated depreciation. It's lower than that now. I think it's 80. I don't even know what it is exactly. Let's call it $80,000 in accelerated depreciation. So 80% of the purchase price of the truck, you get to write off on your taxes to reduce your adjusted gross income. So if you buy a $100,000 truck, and you do accelerated depreciation, so you write down $80,000 in income, and this is where people don't understand it too. They think, well, that's fine, but I'm only in the 20% tax bracket, right? Well, move yourself up to the 40% tax bracket, and this starts to mean something, right? And so you take $80,000 reduction in your adjusted gross income times 0.4, so $80,000 times 0.4, that's $32,000. So you either get to give $32,000 to the IRS, or you get to buy a new truck. One of the two things. One of them is going to happen.
Vroom, vroom.
Vroom, vroom.
That's right.
And so when people see, coming around August, September, October, right? September, October, November, people buying new vehicles or quote unquote their toys, if you live outside of the world where that is meaningful, if you're W-2 and you don't make a lot of money, you don't understand what just happened. Once you get inside that world, once you get inside that bubble, and you are faced with a $30,000 tax bill or a $100,000-something tax bill, and you start asking yourself, how do I reduce this? Like, how do I keep more of this money? You do one thing, two things, three things, four things, five things. You start to do multiple things over the course of a year in order to reduce your tax liability.
Yeah, and the scarcity mindset probably just heard keep as in hold it in a bank account. Like, it's not all the time that. It's reinvesting it back into other things that you are using. So a lot of people think hold as in
that's right.
I keep it, like I see a physical number on a screen,
Yep.
or I spend it in the right area, or
Yep.
the better verb is invest it in the right area.
Yep.
And 2 years ago, Henry would be rolling over because he didn't know any of this. But I mean, that's essentially, like you say, buy a truck, but it's really, it could be a truck, it could be anything, but it's taking that money and investing it back into.
Well, the IRS code guides you, right?
Exactly.
The IRS code will tell you what things you can do, what you can invest in or purchase or do in order to reduce your taxable income. And so to your point, right, where you're saying somebody is hearing this and they're just hearing keep it, put it in the bank account. Well, no, because here's what you're doing. You're buying that $100,000 truck. you're keeping $30,000 cash that you would have otherwise had to give to the IRS. You're keeping that $30,000 cash. You're going and investing that $30,000 into a cash flowing asset that you just bought at a discount, that cash flows positively every single month and gives you further depreciation tax benefits after the purchase of the asset. And so, yes, you bought a truck. You saved the money through accelerated depreciation on the taxes, and you use that capital then to go buy another asset. And so now what do you have? Now you have a truck, and you have another asset that's paying for your truck. And so it's a self-perpetuating game that is fun. And Henry, you and I were talking about this last week, and the conversation was, well, what are you going to do to reduce your taxes? Because you were talking to your CPA, and he was giving you some advice. And frankly, I thought the advice he was giving you was pretty smart. Like he clearly knows what he's talking about, and he had some pretty good strategic guidance and advice for you. And, and that led to the conversation of, why did I buy an airplane a couple years ago? Why did I buy a TRX? Why did I buy a new airplane this year? Every single one of those buying decisions was perpetuated based on, number one, something that I wanted. So I had a desire. But number two, it was I could either buy the thing I want or I can give the money to taxes. 3 times in a row, I bought the thing I wanted because that makes more sense.
Right.
And now, Henry, you're faced with the same dilemma.
Indeed.
You have to sit here and you have to decide, do I buy the thing I want or do I give the money to taxes?
What are you thinking, Henry? Are you buying a TRX or what?
What's it going to be?
Henry's thinking vroom vroom.
Yeah.
What's it going to be?
I mean, we already have a calendar slot on in the meeting room this afternoon to pick the color. So I mean, that's
Hey, wait a minute! I didn't get the invite to this yet.
yeah. You're getting it now. We did it last year with you. We're gonna do it this year with me.
Yes,
The
Amazing.
color.
yes, I like it.
So this is about to be a TRX squad.
It ain't no, not a TRX. Close.
What are you thinking?
It's little brother. The step below it. It's just the 1500 Rebel.
Oh, okay.
So
Cool.
No, that's a sweet truck.
it's sweet.
Yep.
Yeah, it's
That's,
great.
well, and you remember, I on my spreadsheet when I analyzed my buying decision last year on the TRX, I had the TRX, I had the Rebel, and then I had the Tundra.
Yep,
Right.
the new Tundy.
Because I had driven a Tundra in the past. I loved that truck. It was big and comfortable, and like I loved my Tundra. It was a great truck. But I was like, I kind of want a sports car, but I've got so much stuff in my garage that I didn't really have a room, to buy a truck and get a sports car. And 6 months out of the year in Colorado, you can't drive a sports car around. So, I kind of had to have both. And so I woke up one day and I said, well, what if I bought a sports truck?
Yeah.
And so that's how I landed. But I did my spreadsheet, and here's what I determined. I looked at the gas mileage of the Tundra, the Rebel, and the TRX. And I said, what if I drive each one of them 20,000 miles a year? And what if gas is $5 a gallon? Because we were assigning Bidenomics to the price of gas. So what if gas was $5 a gallon? And, how much was it going to cost me to drive the TRX versus to drive one of the other two? Because I've had a Dodge, a Ram truck in the past. Before my Tundra, I had a Ram. And so I liked both, and I was good with either. I determined that it was going to cost me about $350 a month more to drive the TRX than it was going to drive either the Tundra or the Rebel. And so for $350 a month, I get to get up and go on vacation every single day when I pull out of my driveway, put it in sport mode, and announce to my entire neighborhood that I'm leaving.
Yes, they love you, I'm sure.
My neighbor calls it the beast. He hears it. He hears the cold start in the morning.
Yep.
Because I'll jump in and I'll start it up, and it just goes into a loud growl start. And he works from a home office, and his home office is kind of on the corner closest to my location, so he can hear it across the way. And sometimes he'll text me, hey, you just started the beast. It's pretty funny.
Beast.
Yep.
I love it.
Yeah, I mean, even not even on like the well, also the truck side of things, but they're like, just for me, I'm doing an investment this month to get all the business model set up as well through that same CPA company, right? So in general, that's something that I guess I could try to learn myself and do it on my own to save a couple bucks, but I think
Not
it's
worth
just
it.
I don't think it's worth it, and I just think it's a better use of my investing and cash power to go and spend that within the LLC.
Well,
And-
so think about it.
Yeah.
So think about it for a second. So let's say it's going to cost you $5,000 to set that up. You're going to invest $5,000 with this company to do the infrastructure for you, to just make sure that you're dialed in, right? That $5,000 is an expense to your business. So it reduces your taxable liability by $5,000. Well, if you didn't spend the money with them, you would have, $5,000, let's say at the 30% tax bracket, that'd be $1,500. Or is that right? Yeah, $1,500. And so you're either going to spend $1,500 in taxes, or you're going to invest $5,000 to get the asset of infrastructure set up for your business. And because your business makes money, you have the money to make that investment. This is what people that live outside of that bubble don't understand. They don't understand why a business owner makes a decision to spend money on something or invest. I don't think it's a spend. I think it's an invest.
Yeah.
Because what are you getting out of that? You're not just paying them for services and getting something that goes flash in the pan, poof, it's gone. You're actually, now if you would just pay the taxes on it, that $1,500 and poof, it's gone, right? But here you're spending $5,000 and you're getting the asset of infrastructure. And so I always try to look at investments I make or things that I pay for. What is my short and long-term reward out of this? Is there a return on that investment that I can measure in some way, shape, or form? And as we head towards the end of the year, I mean, people have roughly just over 30 days from now until the end of the year to make those adjustments for 2023 to save taxes come September, October of next year, right? Because you're going to file an extension so that you keep the money in your pocket for an extra 6 or so months. Let's see, April to 4 to 9, so 5 or to 10, 6 months, right? You're going to keep the money for 6 extra months because you believe that you can use that money better than the government can to grow your business, to make more, to set yourself up. And so you've got really 2 dates. You've got December 31st, between now and December 31st, to spend some money, make some investments, do things that get you a return on it, on that investment. And then you have till April to file your extension. And then you have until September, October to handle it from there. So you're gonna file extension personally and file an extension for your companies. And your companies, the way you're structured is everything's going to roll to your Schedule E on your personal tax return. So all the tax liability is going to roll up to you personally. Any income that is made, any depreciation or any write-offs that are purchased, they roll to you personally. So here's a question I want to know. What color are you leaning towards?
Well, I did a workshop with Livia yesterday where I was like, all right, I put it up on the big computer screen in the office, and I said, okay, it's exactly what we did last year with you. And I was like, okay, what do you like? This one, or even this one? And she actually landed on the metallic silver. That's your TRX.
Yeah.
I like the darker granite gray, the little bit more charcoal muted gray.
Yeah.
But I looked up pictures of it in real life, and it's really dark.
It is.
On the computer screen, it looks like Toyota's muted gray.
Yes.
But it's not that in real life. It's more of a like blackish gray.
Right.
It's kind of metallic, and that kind of threw me off. And the silver actually on the site, on the computer screen, looks more shiny silver, but in real life, it's actually more of the muted gray.
Yep.
So
the gray color, the charcoal one that you're talking about, kind of looks like Mike's jacket, the chest on Mike's jacket online, but in reality, you're getting his sleeves.
Yep.
See, I tied you into this conversation.
That's really good.
I love it.
My sleeves are black, but Henry's is darker.
Yeah.
But
So
yeah,
they do a pretty
screen
cool.
can throw you off for sure.
Yeah.
Yeah.
They do a cool blue, but it's sort of bright and in your face. I've never liked white trucks, and red. I just don't like either. So I think.
Well, I bought this. Remember me? I was between that charcoal and the silver as well. I bought the silver because I've had silver vehicles in the past, and I like them because even when they get dirty, they look.
They
clean.
look clean. This time of year, you're gonna have to wash that darker truck twice a day.
I saw a white truck this morning that was like brown.
My little white Prius is trashed.
Yeah. So anyway, good. I mean, good conversation. But this is talking about people's point of view, right? If you've never experienced making money as an entrepreneur, as a business owner, and having to make the decision or being faced with the decision of, man, I have this big tax liability, like this big tax bill is coming, and you asked your CPA the question, how do I reduce this? How do I keep more of this money in my pocket? Those decisions are kind of the next plateau in learning, right? Most everybody focuses on how do I make money? And then the next plateau is how do I keep the money I just made? And that people don't always understand that they have to accelerate the learning of how do they keep the money because there's a deadline to it, right? January 1, you don't get to wake up and say, okay, the holidays are over. I made a lot of money last year. Okay, what am I going to do to keep this? How am I going to reduce my taxes? Oh, you missed it by 24 hours because all of the things that you can do to reduce that happens in the same year you made the money. Now, there are some things you can do beyond the January 1 or December 31. There are some things that you can do that can be retroactively applied. But in general, don't wait until January 1. Do it right now.
Good stuff.
All right, guys. Well, I think that probably brings us to the end of another show. I hope you guys got a lot out of this. If you did, do us a favor once again and just like the show, share it, subscribe. And if you're listening on your favorite podcast player, subscribe there and then share it with your friends out on social media. So, guys, that is another wrap for us. This has been another show of the Real Estate Mogul Show, been brought to you by Freedom Soft once again. We'll see you in the next one. Cheers.
Peace. Bye.